Morning. I wanted your thoughts on how the market has, moved over the last 3 or 4 months. Absolutely no correction, just one-way linear move. Do you think this pattern will continue? You'll have to buy at these levels, or you think, a significant dip could come?
I don't think so, Anuj. And in fact, I would like to divide the market into two parts at this point of time. One being the large caps, where substantial liquidity from large investors, particularly overseas foreign portfolio investors, is going to be focused on. And second being the mid cap and the small cap space. In fact, I really want to sound a word of caution for the mid cap and the small cap space right now. I see a large number of small cap and mid cap stocks built up phenomenal amount of froth, which is way ahead of the fundamentals. So the price value mismatch is very significant in that segment of the market. However, at the same time, the fact remains that it's a liquidity driven market more than purely a fundamentals driven market. Money would continue to flow in, but I think a good amount of money would now flow into large caps. But at the same time, you will not see a substantial change in the Nifty or change in the top line indices. Is because within the indices, you will see a rotational kind of movement, which is typical of bull markets. The stocks that have run up substantially, even in the large cap space, some of them have run up 20 to 40% in this year itself, in this calendar year. They would take a break or correct, where the ones which are laggards or who are showing early signs of fundamentals picking up would actually do the catch-up act. So to cut a long story short, from an index standpoint, the worst kind of correction you will probably see, barring unforeseen, black swan events, would be 150, 200 points in the Nifty. But I think the mid-cap, small-cap space is really worrying me right now, and that's where one needs to be extremely cautious as to where one is putting money, where one is holding. In fact, you may actually want to take a good amount of profits off from there also.
Okay, morning, Sanjay. You certainly look in the pink of health today, like the markets are. But let me toss what you said about mid-caps to Udain as well. Udain, people are overstaying their welcome in mid-caps, in many of them?
Lata, it depends on how swift the earnings recovery is. Even this quarter, you've seen a lot of the mid-cap sectors which had run up quite a bit, actually disappointing on earnings. I mean, you look at microfinance, you look at tires. There are many sectors in the mid-cap cluster where earnings have not been anywhere as good as what the stock prices were indicating over the last 3 or 4 months. But the theme that every investor is now playing is whether we are on the cusp of a multi-year earnings recovery after 5 years of no earnings growth or practically no earnings growth at all. Now, if the answer to that is yes, and we get surprised starting maybe end of this year, over the next 3-4 years in terms of how smart the earnings trajectory rebound is, then I think some of the mid-cap valuations might be accounted for. Of course, Sanjay is right in pointing out that some of the mid-cap valuations now are not just lofty, they are in bubble zone. But I think it's important to distinguish between the categories which are going up because there is some kind of a fad attached to them, and the categories where there is a genuine expectation of solid earnings recovery after 4 years through the next 3-4 years. 3-4 years of earnings rebound can actually justify a lot of earnings or P multiple froth, as we've seen in previous earnings recovery cycles. So I think it's important to distinguish that some of the mid caps where P multiples look at 40 and 50 right now, in 2 years they would moderate very significantly because they will get the earnings catch up. But I think that will probably be only 25-30% of the mid-cap universe. I think the rest will fall by the wayside. And when that happens, when the blinkers come off earnings expectations, you will find that some of these stocks trading at lofty valuations will go through a huge time correction just to adjust for that P multiple. For 3 years, there'll be no growth in their stock prices at all, as we've seen many times when people got their earnings expectations wrong, betting on a recovery.
Okay, Udayan, thanks a lot for sitting by and speaking to us about a whole host of issues. The market is doing fine, actually doing quite fine, up almost half odd %. But there are a couple of stocks. Titan is cracking hard, so almost a 4% knockdown on Titan right now, post its numbers. So do keep an eye out on that. And traders are once again preferring metal names. So from the heavyweights, if you look at it, names like Hindalco, Tata Steel, etc. are the preferred options this morning. Sanjay, hi, good morning. I wanted your thoughts on how one can approach PSU Banks now. A lot has happened over there. There's the NPA resolution mechanism that could be finalized by the end of the week, etc. Is this a space that one can still jump into, or would you advise caution here?
I'm glad you asked me this question, Sonia, and more so because we have Lata on the show. There's no one better than her to actually comment on the banking space. You know, banking is really the elephant in the room as far as the market is concerned. You know, we started with the Gyan Sangam and the Indradhanush and, you know, the Banking Bureau Board, and now we landed up with the NPA audience and, you know, giving powers to RBI to actually micromanage individual accounts. You know, that's one space where there is phenomenal potential. There is good amount of undervaluation also in a lot of PSU banks. But I'm still not able to grapple with the macro picture that is panning out with regard to the huge NPAs. You know, what exactly is going to happen? We have committees over committees. We've had, you know, so many deliberations over the last 3 years. So, on balance, and then last weekend we had this bomb thrown at us from on the private banking space, 2-3 private banks, you know, their NPA figures not matching the figures reported as far as what RBI said. So, to cut a long story short, I think this is a good time to look at the PSU bank space, no doubt about it. Look at the Tier 2 PSU banks, which I think would have done 99% of the clearing up once all of them finish up announcing this quarter's results. That's March 2017 results. So, you know, even an SBI or a Baroda or a OBC, you know, these kind of places I think are safer bets to look in, because you can't ignore the financial services space, you can't ignore the banking space. But understand the risk. You are still grappling with the big problem as to what exactly is going to happen on the NPA front. So there would be surprises coming up there, so you'll have to live with them. But over the longer term, you will make money in the banking space, no doubt about it, and I definitely prefer the PSU banking space still, like I did about 1.5 to 2 years back.
Okay. Sanjay, the other space which has really got re-rated is the two-wheeler space. You know, names like Eicher Motors in particular. We've seen TVS Motor in the mid-cap space see a big rally. Bajaj has also done well. Hero MotoCorp has been a laggard, but also picking up. Any stock picks here?
Anuj, I think that's one space, like I mentioned earlier, that some of them would consolidate, correct. So my sense is that the automobile sector as a whole would kind of consolidate at the current levels and give you a minor correction also, while others in the, you know, indices or the top rung stocks will come up. Yes, there's no doubt about the fact that the stocks you mentioned do hold tremendous potential, because we are in a multi-year bull market, and not only a multi-year bull market, but actually a growth cycle that's probably going to last for a few years as far as the real economy is concerned. So if that be the hypothesis, there's no doubt about it that the two-wheeler space would look very attractive over the next 2 to 5 years. But in the immediate short term, next 2, 3, 6 months, we may see a little bit of a consolidation, correction, occasional spurts. But to say that, you know, there will be a straight line up even in the next 3, 6 months, I don't think so, like what we've seen in the last 6 months.
Okay. Sanjay, I do hope